demonstration will show the process of remunerations using the Reconciler. We're going to be starting where income begins to be calculated in the advice journey and turning into income expected. We'll then look at how to treat statements that you receive and how to reconcile them. Recommendations. The journey begins when an advisor makes a recommendation. Recommendation can be added very easily via an account. Today I'm going to add an ISA recommendation using a recommendation template. By using a recommendation template, you can pre-configure the template to fill out the recommendation automatically and also include fee templates. As you can see here, the only manual input I have to do is to add the contribution amount and frequency. Once I select Save, the ISA recommendation has been added to the account. You can add as many recommendations to a client's account as required. By using the templates, these can be done with very few clicks of a button, as you can see here by me adding the self-invested personal pension. Once you've saved the recommendation, you can go into them to access further information from there. As you can see on this recommendation, it's pulled through the fee template automatically, which in turn has pulled through the fee profiles. In doing this, CURO has calculated the return expected, both for initial and ongoing fees, making it easy for you to know what amount to disclose to your client. When any advice is ready to be implemented, it's done via the recommendation status being updated on the business process flow. In this example, based on the recommendation I've import, a new plan will be created within CURO, along with the contribution, and will also include the income profiles. If you have more than one recommendation, you will need to implement the advice individually. Back within the account, once you've implemented your advice, you can view the new plans in place. As you can see here, an ISA and a SIP have been created and set to proposed, however, they don't have a plan number or any valuations yet. The income profiles have also been pulled through from the recommendations, however, please note income expectations have not been created yet. When a plan or investment has a plan number and valuations, the income profiles will update and the income expectation will then be created. Valuations. There are two options when it comes to valuations. The provider may run a schedule each day, in which case the system will update the valuations automatically. Alternatively, you may receive a file and will need to upload this manually. For the purposes of this video, we'll demonstrate how to upload a manual valuation. To upload the valuation, you will need to be within the provider record. It's a simple upload using the CURO integration button, and you can select the file and import it. Once finished, it will show a summary of how many plans have been updated and how many plans have been created. As you can see, this upload has updated 2 plans and hasn't created any new ones. So this means that the 2 plans we created earlier from the recommendation have now been updated rather than duplicate plans being created. On the plan view, you can now see that the plans have plan numbers and also valuations. This has also updated the income profiles to reflect the plan numbers and valuations. And so this has now also set the income expectations. Income profiles and expectations. There are different income profiles depending on whether it's initial advice or ongoing advice. In an initial advice income profile, you can see that it's set to original investment from plan. Underneath this, you can see the amount due that is calculated on the original investment amount. This will be the figures you declare to the client of what you're going to receive. Within the ongoing advice income profile, the assets accessible is set to funds under advice from plan. The valuation file we uploaded earlier will update the value accessible field. Under the amount due, it will calculate based on the frequency and the percentages agreed. You can see from the income profile what the income expected is and the date it's expected to be paid. CURO calculates the amount expected from a snapshot point in time, so there may be differences between what's expected and what's received depending on how the provider calculates the figures. Any differences between what is expected and what is received can be handled within the reconciler. Within the expectation, we can see that the expectation date on this is the 6th of January, and this will be before the period end. The period that this expectation relates to can be found within the allocation section, and you can use the hyperlink to navigate there. The period will show its status, the cut-off date, and period frequency. Further down the form, you can see all of the expectations that have been pulled through. The balance section will also show the cumulative total of these. So any expectations relating to this period will continue to update automatically until the period is set to pre-close or close. Reconciling statements. When you receive a statement, this will need to be uploaded to allow you to use the reconciler. You'll need to be within the provider record to do this using the CURO integrations button from the process ribbon like before. This time, select the Remunerations upload. The statement can be named to fit your own naming conventions, and please note that the date will be defaulted to the current date. Once done, select Import. When it's been uploaded, you'll need to go into the statement to reconcile it. You can view any statements that have been uploaded, and if you wish to see the items within the statement line by line, go to the ribbon drop-down and navigate to Received. Back on the main form of the statement, you can see from the stats overview and status details that the statement has already been auto-matched. This will show you how many items are unmatched, how many exceptions there are, how many are ready to commit, and how many have been committed. This will give an indication before you begin to work within the reconciler. By entering a date and saving the form, it will now give you the option to go into the reconciler. You can see a high-level view along the top showing how many items are unmatched or how many exceptions there are. You can work through the options in a logical order, matching an item or run a tolerance test before the item is fully committed. With unmatched, this should pull through items where there are no records within CURO. Now, it may be that the records haven't been created or completed fully, or that the income has been sent in error by the provider. The unmatched items can be paid into sundry if you wish. In doing this, it will create the income profiles, expectations, and then match it. You can then manually amend that later if required. Alternatively, you can go into each unmatched record line by line, and here you can search manually for a record to match it with. You can also create a new plan against an unallocated holding contact, which will allow you to create an income profile to match it with. By going through the unmatched record line by line, it will allow you to match up with plans that you may have in the system already that have not had income profiles created, and this will create them for you. Moving on to the Exceptions tab, it will highlight anything that has not passed the tolerance test. In this example, it shows that the amount received is £450. You can select a match link, and from the income profile I've entered, you can see the income expected of £400 versus the income received of £450. It will also allow you to enter other related records from here. In this case, I can follow this item through to the original recommendation, and we can see that this is for the initial advice on the ISA that we created earlier. Back within the reconciler, you can view the rules that will flag an exception under the tolerance details. We can see that this case was flagged as it broke two of the tolerance rules. This case was over the percentage tolerance and also above the minimum tolerance. You are able to configure your own tolerances within CURO. With any exception, you can write off the difference or you can carry the balance. If you carry the balance, it will show that the item is still outstanding. In this case, as the amount received was higher than expected based on the initial advice, I'll carry the balance forward. The next exception is an exception because it flagged the amount limit. If you're happy with the amount, to move on, you would need to write off the balance rather than carry the balance. The last exception is flagged due to it being less than expected. There may be times that you wish to accept the difference rather than take action with the client or the provider, in which case you would need to write off the balance. Once you've dealt with all the exceptions, you can move on to commit the items. Once you commit, any exception you selected write-off for will write off the differences. This will then be fully reconciled. Any items that you've carried the balance on will be left open, as there'll be a balance to address either because you've received more or less than expected and there is some sort of action to be taken. It will therefore show as committed but not reconciled. On a reconciled item, you can see on the expectation that the date under received has now been completed, and underneath that there will be a zero balance as nothing is expected. If there are any adjustments, this will also be visible. In this case, there was an adjustment due to writing off the difference. On an item that was not reconciled, you can go into the expectation using the match link and see that the figures under received have been updated with the amount that has been matched. However, due to the difference, it will still show an outstanding balance. In these instances, you may receive further statements from a provider which contain adjustments. In these cases, you would upload the statement as before. It will auto-match, and from what we can see in this example, it has found the same record that was not fully reconciled. Within the expectation now, it's updated the amount received back to £400 and will show the breakdown under income received. Bank receipts and period end. Once you've received the income, you can log the bank receipt within the system by completing a few fields on a bank receipt record. This can be linked to a particular period, and you can also link it to any statements. Once the statements have been linked, the totals section will update to reflect that information. You can add the bank receipt before or after you reconcile the statement. Back within the period, we can see that it's updated automatically to reflect the reconciliation that we've completed, along with updating the bank receipt section to show what income has been received. This will continue to update with anything relating to this period until we close the period off, which means throughout the month you'll be able to obtain up-to-date information regarding remuneration. The period can be closed by completing the business process flow along the top, and it will also allow a new period to be set. If you have any further queries, please feel free to contact our support desk on 0800 032 3774 or via email at support@timeforadvice.co.uk.